Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, investors had a rock and roll week as the stock market moved up and down sharply. Investors sold the market hard early on as a trade deal seemed like it was a long shot, and the U.S. had banned 8 Chinese tech companies based on human rights issues. But by Wednesday, rumors or leaks hit the market of U.S. concessions and a partial deal coming. And then on Wednesday, the FOMC minutes came out, and a speech by Powell, which did little to move the markets despite Fed confusion. But then Powell came out and announced QE4, or by some other name, and that did help the markets move up on Friday, as the Fed has announced that they're going to do $60 billion in purchases of bills over each month for the next 4 months. Of course, the purpose for that is to put a lot of liquidity into the market, which is showing strain, and also to change the yield curve as they push interest rates down on the short end, and interest rates are moving up on the long end. And then the market really got wild. Post-market on Wednesday saw several very conflicting news items, with the market moving up and down very sharply. First, it was China supposedly leaving the talks early. That sent the ES futures down about 40 points. Then they rallied all the way back to the plus side on a denial of that and another report that came out. Then suddenly they moved back down 25 points and then back up near the unchanged level. All of that happening just after the market closed on Wednesday. But early Thursday morning, President Trump tweets that he will be meeting with Chinese Vice Premier, which is happening today, and markets took off, actually twice. Once on the announcement of the meeting, and second on his video that came out that he spoke of, that he said talks are going very well, as he said. Well, the market exploded and then continued up all on Friday with massive amount of buying coming in. S&P 500 getting up over 50 points at one time. But then it started to slow down and back off as the news came out that Powell said about QE4. And of course, that is an indication that economy is under strain, that the banks are under strain, and then the market started to get a little sloppier. Of course, the market's a little bit nervous about what's going to come out later today on this Fed deal. Here we are around midday, on the trade deal. And the meeting is supposed to happen around 2:45 Eastern Time and end around 3:55 Eastern Time, as the president has given a whole 1 hour and 10 minutes to that discussion. That must mean that, well, everything is already figured out. They just wanted to make sure that, if this is disappointing, that they didn't really disappoint the markets while it was still open. That's my guess. But during the day, the president has been tweeting again and pumping up the market, and that's what he likes to do, and it brought in this amount of huge buying. Bigger picture wise, we said October was going to be a weak month, and it still, in our opinion, has downside risk, though present action has suggested only a test of recent lows is now likely to come. That's a little different scenario that we had looked at that was looking for some deeper declines. And our thoughts have been that we would have this negative October, and that would be followed by new highs into Q1, and that would be a selling opportunity. Actually, the news that came out about equity outflows has been very significant out of equity funds, and that's giving the market a lot of fuel to get pushed up. And we think that's going to be where the fuel comes from to move the market up to new highs late in the year and into the beginning of next year. But we think that's the end, and that's going to be the selling opportunity, and that a very significant bear market is coming after that time. So that has not changed. Stocks, they had a good week, up about 1%-ish or a little bit more, depending on the index you're looking at. The bond market, 30-year, down greater than 4 points. This was a bad week for the long end, as 10-year yield surged 23 basis points on the week. That is a big week. And then the yield curve uninverts. The Fed really wanted that to happen as they came in and started putting money into the short end and then the long end of the market. In fear of inflation, that's how it goes, yields spike. Gold market down about $17, and that's the safety bid disappearing, and that's while the dollar is also falling. So the moving in sync, which is more of a rarity than not, as the dollar moves about 0.6% to the downside. This is a short-term breakdown, which I'll show you in the short-term view. And oil moves down about, up about $1.30 on the week in a minor bounce. Little announcement that next week is our vacation week. Now, for our members, nothing changes except that there won't be any videos, and there will also not be, of course, a market week a week from today. So we just take the week off, and we're actually using it to move our studios from Chicago down into Florida, so that will take us well into the following week. So the next video will be 2 weeks from now, getting into the Market Week show. Follow us on Twitter at askSlim, and of course become a YouTube subscriber to this channel. And if you like our video, give us a thumbs up. Got lots to show you in the rest of this market.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are...
All right, for the best of the week, here we come to a look at charts. And of course, we are looking at the weekly charts. And we want to make sure that you do consider our cycle analysis workshop if you like these videos. And you will see the very unique type of analysis that we do here. So we'll take a look here as we switch over to the charts. First chart we're going to look at is BBBY. This is the big gainer for the week, and there were some good gainers for the week, not much on the downside. BBBY, you see we're looking at a 2-week weekly chart, and you can see in here the cycle analysis right in here. This bottom arc that you see there, or half circle, is called a cycle bracket that helps us as a guide for the repeating patterns in the market. You could see the rhythm in here as it makes a low right here and then makes a low right here and then turns up. So this is the green zone. That's the rising phase of this cycle. You can see one right in here, and of course one right in here that didn't last long. Note that once this key low over here was broken right over here, it sets it into a red zone and sends it down through the entire rest of the period in this declining phase. Here it had only a minor short-term red period there, and then it turned up into the rising phase. Note the sell zone right in here. That's created by the swing high, swing low analysis. That is this high and this low as our anchor points to give us that sell zone. So it's moving up as anticipated. This stock had its biggest up day in almost 10 years. As the target CMO became the best BBBY CEO. Big job turning around this big company, and I got to tell you, I think they're going to have problems doing that. This is the area we think it's a sell, up around between 1330 and 1460. It may get a little ground up into that area, but we don't think it's going to be able to follow through much beyond that. Up 8%, up 30% on the week. Dillard's up 8%. that moving into the sell zone also. Now, we were more positive in the teen retailers, Abercrombie and GPS. Those both up about 7% on the week, following the patterns that we had suggested was coming. So that's a look at retail, which had a decent week. Next, we're going to look at Roku, ROKU, one of the newer symbols that we look at in our 300 plus stock universe. We had thought that Roku would be getting a minor bounce in this area. Now, some analysis that we do, and Roku was part of that analysis a few weeks ago, is that we said that when a stock gets very far from the 34-week moving average, it often has a big move down towards it. Now, this is very key because you'll see the cycle rhythms in here. And you will note that this low right over here comes very early in that cycle. It suggests that all of this period over here has downside risk. So this rebound is not a surprise as it gets back up to what was support on that 13-week moving average. But note the momentum here. That's our momentum indicator coming down. We think Roku is going to get slammed again to the downside, up 14% on an analyst upgrade. And we say that Roku is a sell. Airlines also had a big week. We're going to look at one of them, SAVE, which to us looks like it's in an area of making a bottom. Now, American Airlines up 8%, United Airlines about 6%, and both look like another dip is coming. When you look at this pattern right in here in Spirit Airlines, this one, it really looks to us like it's trying to make a bottom. Now, if I think the other airlines have another dip coming, this one might too, but we think that this one is buyable, and that if you really want to be a bargain hunter and you want to, catch that proverbial falling knife, that this stock may give you that opportunity again. I would say between 33 and 34 is probably a pretty good entry for what would be the next rising phase. If you look at rising phases in here, you'll be able to see that, well, this one right in here gave you a long advance. This one gave you a brief advance that was tested, that whole period in there about 3 months. This one rallies for about 7 weeks and then hits that sell zone and collapses. So you could see we're early in here, and either it's going to test it or not, but then probably moving to the upside, and you're likely to get at least a month to potentially 2 months of some decent upside in SAVE. So we're going to look for the airline group to have some more problems in here, and then after that be moving more to the down to the upside again after that pullback that we're expecting. So buyable on dips as we look at that. The next thing we'll look at is Hess. Now I'm going to show you Hess, and then I'm going to also show you, in the worst of the week, Devon, another gas stock. This is probably one of the best energy patterns that we're looking at. Now, with natural gas so weak and energy so weak, got to wonder what their strength is in Hess Company. But it's got a very bullish pattern, and our thoughts were that it would kind of bounce around in here and then have another sharp up move. As a matter of fact, there is an area up there of the fib extension target zone that's about at $80, and that was our target in here. We think it might chop around some more in here a bit, but then get that move up there. So it's a big gainer in the week on an analyst upgrade, and we'll call this one of the best energy stock patterns that we see. The last stock in the best of the week is, I think, one of the worst of the week. I'm short this one. This one is Domino's Pizza. This stock came out with bad earnings, and the stock collapsed. You can see this big down move here, fell all the way to 227-ish, and now it's 257. So it rebounded, as you can see. What happened was that after the news came out, well, they said that they're going to buy $1 billion in stock. Of course, anything to hold the stock from collapsing, and then it moves up into the sell zone. So I'm short in this area. I think the stock has potentially a little more upside. Here you could see 262 in the middle of that resistance. That's not very much in a stock like this. And then we think it's going to go down again. It might even threaten that 227 level. We think that looking at the configurations in here, and for those of you that are students of cycle analysis, you can see this negative configuration in here. The odds are very high that after you get a negatively configured cycle that closes below where it began, that the next one will fail in the sell zone and then move down again. So because this is a high probability stock that to move to the downside, it says to me that it's likely to fulfill what I believe to be one of the riskiest stocks for this year. Now the stock is slightly up on the year compared to a stronger stock market, and it certainly could finish the year down on the year. So Domino's is not a stock that I like, and I would be looking for that stock to be moving to the downside in a significant way soon. $1 billion buyback, maybe they'll support it for a little while, but I think the stock is headed lower. That's the best of the week, and certainly one that I think is the worst, and we'll be moving on to some of the bad stocks.
Coming up are the worst stocks for the week. There are some real stinkers here. Some of these are breakdowns or extending losses in really bad chart patterns, and some present great buying opportunities. Watch as Slim makes that all clear to you with his very unique analytical style.
Anything can happen. So there you go. What we're going to be looking at here is the worst stocks for the week. And these stocks in here are interesting because we recently spoke of them again. And the first one that we're going to look at in here, switch from Domino's, is SPWR. As we look at SunPower. Now this one is interesting as it has analysis in here of two different projections. Now I'll show you why I have these two projections in here in a moment, because this kind of lines up pretty good with First Solar. SunPower down another 12% on the week after this major failure. We had predicted it to get up to about $17 or higher, and you could see it moved up but was not able to get up to that fib target extension zone, and then it came over here and broke this key level. So we're not 100% sure on this pattern, because either this low right over here is key and it's a bad breakdown, and this is the projection right over here for that scenario, or it's making a low right over here, which would be a little unusual on the shape of this pattern, but it aligns with First Solar, which I'll show you. So that would mean it would be about to bottom pretty soon and then get some kind of a rally on the upside in here. But solar stocks have been under a ton of pressure. Now I'll show you the First Solar pattern. So SunPower down 12% on the week, First Solar down 8% on the week. I wonder if some of this has got something to do with, that's not it, FSLR. I wonder if some of it has something to do with the power grids in California getting shut down. Maybe that because they actually need power to work, maybe these are not performing well because of that. But you can see in here what we're looking at. Like I showed you, that there might be a bottom coming in SunPower. This one is due to bottom actually in the next week, so that might be what's going on. So we might get a rebound soon. This could again move into the sell zone. This is a negatively configured pattern. It broke down underneath that key support, which is a violation. So we'd expect it to rally into that resistance zone and then sell off. So we'll be looking for a bounce in SunPower, and we'll be looking for similar in First Solar. That is likely to get you up to that 60.70. That level right over there is 62.30. So that's about what we're looking for here in these solar stocks. So I mentioned Hess, that was a pretty bullish stock in the natural gas. Devon, DVN, is on the list of worst for the week, only down about 5%. But I want you to see this pattern in here. Now, this is interesting, and a lot of the energy stocks have similar patterns, and that is you had this pop in here on the bombing of the Saudi facilities, and then they all came right back to those lows, including the oil price. But there's a bottom due in here. So I said Hess is likely to bottom and then be moving up again, and I think Devon is going to join it and at least have some kind of a rebound. So for short-term traders, I like both Hess and I like Devon for a rebound. Hess, a great pattern. Devon, not a great pattern, but likely to give you a rebound. As the gold markets have been soft, then the gold stocks have been also. And here is GOLD, Barrick Gold. This pattern follows gold pretty nicely. Now, the gold intermediate pattern, and for those of you that watched Future Speak, you could see that we were expecting another month or more of struggle for the gold market, and of course gold getting hit today. This is Barrick Gold that we're looking for another move for about the next month to the downside into this buy zone. That's around 1580 right over there. The top of it is around 1680. So somewhere in that zone right over there in the next month is where we think the real buying opportunity is coming for much better prices in gold and gold stocks. This down about 3% on the week. Got an analyst upgrade today, but we do think that there is another month in this stock. During the time when the market struggled, a lot of investors were piling into the consumer group, the XLP, and that gave lift to stocks like Kimberly-Clark, JP Morgan. Both of those stocks actually have patterns that look very toppy to me right now. Kimberly down about 2.5% on the week. And the consumer, these stocks have been a hiding place. Analyst upgraded the stock this week, yet the stock is down on the week. So that to me says that there's a lot of pressure coming in. Kimberly down on the week, 2.5%. We think it's going to be down more. Now, note it came down and tested that 34-week moving average. We think best case it's going to get down to that low again on a 128, about $10 from here. So that's a stock that to us just does not look great right now. Has been very consistent buying going on for this entire year. You could see that rally that had kept it going up the whole year. Here's actually well into last year. Here's 18 months of rally with some cycle dips in there. You could see the cycle low here projected, this early bottom, which tends to be bullish, and then this long period through that target zone. So got this evening star that doesn't look great to me. You had an engulfing actually right over here at a similar level. So it looks to me like these stocks are getting, in this consumer group, are getting liquidated because buyers want to use the money elsewhere, and we think that this stock in this area is a sell. That is the 5 worst for the week, and I'll be right back to show you some very interesting stuff.
Next is Slim's short-term view for the coming week. Watch as shorter-term charts are used to project 5 major markets in price and time. And there is also an emphasis on momentum to help keep positions set with the highest odds of catching the biggest short-term moves.
So before we get into the this very interesting week of the short-term view, I want you to see this chart. This is a chart that we put out every single morning, and this is a live chart. You're looking at the live S&P 500, NASDAQ, and Russell on a 15-minute chart with our analysis on there of the support and resistance areas, the key acceleration breakout zones, which is really what under most circumstances they are going through them in a very significant way, and that's really where you know how to catch your big moves. And of course this is a very key day because the market exploding up to the upside, and you can see it gets way up over here just past the resistance for the S&P. It nails the top of the resistance there, and the same thing over there on the NASDAQ and on the Russell. This is our daily snapshot live stream. And you can get this up only by becoming a level 2, 3, or 4 member. If you're a short-term index trader, you're going to be blown away about how good this is. This line right over here that you see, that's our reversal scout. And what that gives us is the points of reversal, the likelihood of reversal, and of course momentum. And you can see when there's an upside momentum, you're likely to keep moving to the upside like we have going on right now. There is a slight flattening at this time going on, so it drove these stocks to the upside as that gave you this sense of momentum. That is a very, very great type of analysis that will help you in a tremendous way. I want you to write to Matt, M-A-T-T, at askSlim.com. He's, if you're interested in this, he will send you our specials that are going on right now, and we have a couple of them. Actually, we have several for all of our different levels of membership. So you will be able to see our great, really so interesting snapshot. And it also comes to you in an email that you can, for level 4 members, we post it in the site, and you can actually put this right up on your Thinkorswim platform, or you can look at all the numbers that we post in the report that we put out in the morning that goes along with this. So this is the askSlim daily stock index report snapshot. Please write Matt at askSlim.com, and he will help you with that. And fantastic information. So please do take one of our trials. All right, so we're going to get to the short-term view. I'm going to move over from where we were on Kimberly-Clark to a /CL, the light crude market. I always want to be accountable to what I said in the last week. And last week, we overall were kind of an average week for us. We got a 60% correct. We were mostly right in light crude and the gold market and the bond market, though light crude market didn't quite make our upside objective, though the patterns were correct. The gold market not quite as weak, but very close. And the bond market was bigger down than we expected. All of those following the patterns pretty closely. The dollar spot on, we caught that one almost perfectly, and where we absolutely were way off was the stock market. So let's take a look at this light crude market here that you see, and we'll be looking at what we project for the next week. So what we see in here is that negative momentum exists. That's the slim ribbon right in here. You will also note that the projection oscillator in here is overbought. When you're in a condition of negative momentum and the projection oscillator gets overbought, it says that it is internally correcting. That's a condition that would only allow for maybe a slight little more rally in here. If it wants to, it could spike up here, I guess, to around the area of that resistance, around 55, 60 or so. But we think it's going to just kind of roll over in here and then move down. We're going to call it a small down week, still in this negative momentum. And for short-term traders, we think light crude is shortable. Now, I want you to note that there was today talk about Saudis retaliating and bombing an Iranian tanker, and that barely affected this market. So it really, under those kind of conditions of some kind of war in the Middle East, that would make markets nervous. But that is not going on right now, and we're seeing that the market is in the light crude market, not having an easy time of it. So we think it's going to continue to not be able to get very far and probably have a small down week. The gold market /GC is the next one we're going to look at. We had anticipated it would come down, that it would test around 1470 to 75 and then bounce, get one more bounce. Well, it's pretty weak. It gets down over here to 1478, which is pretty close, but it isn't able to put on any kind of a bounce in here yet. So, like I said, with the dollar week and this week, that's a pretty weak situation. What we're looking for, as you can see, is that we talked about bearish gold and gold coming down for the next month, and here's that decline in here. We think that low timing comes in somewhere between late October and the early part of November, and that we're likely to see it come down and test some supports down in the area of 1470 down to about 1452. So we still think that there's downside in here. We're going to call it a small down week, a little bit choppy in there. Note that momentum in here is neutral. You see the slim ribbon there, it's just kind of right on top of itself. So you're not getting any real strong momentum indicator at all. And I don't really know that you're going to until you get past this area over here and then have a pretty significant better period once we get past that low timing period right there. The dollar, we said that it would have a down week, and it certainly did that. $DXY. As it now has moved down into that lower support confluence area. Here's a 78.6% at around 98. We thought it would get down close to 98, and actually there's a support in here on the weekly chart that we moved in here from this low point right over there, and that comes in around 97. So we think that it's going to be a two-wave stair step coming down. This VTL right over here breaking is significant. We noted that. I want you to see that the momentum was positive in here, and so it drove it up all the way. At a positive momentum condition, each time the projection oscillator gets oversold, it's likely to rally again. That's the opposite of what I showed you before. And you could see rally, you could see in here oversold and rally. And you can see right now what happened is that it lost that upside momentum. So if we get into a negative momentum in here, or when it gets overbought, it's going to be a sell. So that would be a setup that we'd be looking for. Right now, we look for another down week in here with a potential bottom coming right near the end of the week or the beginning of next week. So poor momentum, and we're going to look for these tests of these lower supports there in the dollar. The next thing we're going to look at in here is the bond market. Now, the bond market we thought would rally and then roll over and then move to the downside. We could have given ourselves full credit for this, except it actually fell a little bit harder than we expected, as it barely tried to rally early in the week and then moved down. So you can see supports coming in here, 58.13, 57.17. We think that's where it's going over this next week and a half. So we're going to look for a choppy down week still, interest rates still going up during this period, and then a better time coming in a couple of weeks. But right now there's downside risk still in here. Also, I want you to note that the slim ribbon has been in a very choppy period in here. It turned positive only for a few days and now is about to turn neutral. So with that going on, we would suggest that with this negative period right in here, it's sells that we're looking for. We're looking for opportunities to be putting shorts out in bounces over this next week. I think that would be a pretty sensible thing to do. So the stock market, we did not get this right in the stock market. We saw the potential for a market that would be moving to the downside. Now, we had a period of risk right in here that you can see, and this market moves up through the area here. That's the 78.6 right there, and the S&P 500 cash is now up 48 points on the day on this hope of a significant deal. Investors getting all in on that. I got to tell you, looking at this, when it gets up to the 78.6%, something is going on that I have not thought would happen. Now this period of risk now comes in next week, so we would expect that it would be pulling back this week from this upper sell zone. And then probably get another rally in here, and then the next period of risk over here towards into the end of the month for a big decline. Now, because it's gotten up this high, it does have us look at two possibilities. The first possibility, we're completely wrong, and the major low came right over here. That's not one I'd be happy about, because it's really quite off from, it's a month off from what I thought was happening. And then also the possibility that this fails and it comes down and tests the lows rather than getting much below the lows where we had originally thought would happen. In any case, this right in here is a positive case and either raises downside targets or the bottom is already in place. So we always want to look at the new data that we have and do work best to see what happens next. Yeah, we're wrong in here. We did not see this potential for this coming. We still think there's a dip coming in this minor cycle right over here. That would take it down. These are about 9-day cycles, and this is a 6-day off the bottom, so that would give you about 3 days to the downside, and then another move to the upside. Maybe there's a disappointment coming, or a buy the rumors, sell the news coming out on the China deal, but we don't think that there's a lot more right now on the upside. And then, of course, this period of risk over here coming in there. So the stock market did much better than we thought. We're going to call it a small down week. Now, why small? Because we think it will drop in here, but then be able to rebound back. That's this pattern right here. And so that would give us a small down week. Now, we have this negative momentum going on right over here, and we have the projection oscillator overbought. Under that condition, it's the high probability, even though we're at the top of the sell zone, that it's going to pull back. So we think that the most probable is about a 3-day pullback early in the week, and then another attempted move to the upside. We'll have to see, if the market continues to celebrate, if it gets up and closes pretty well past this 29.86 area, where it is right now. Interesting here is we have 2 hours left to go in the day. I would, then again be upgrading my thoughts about this and say the probability is high that the low we were looking for at the end of October came at the early part of October. I won't like that at all. However, it is what it is. We're going to always look at the new data and then and then revise analysis if that's what we have to do. How can we possibly do well if we're going to be stuck to our old beliefs? We have to let the market tell us and be flexible. Right now, we see this massive strength and massive buying coming in, and we'll see if we're right, and we're going to get this pullback here in the next few days, and the market stalls in this area. So analysis way off, and that's okay. We're going to be looking at all the markets to see how we overall do on our record, and because it's not just the stock market, it's all of the markets that we look at. And here, the stock market we got wrong, and we think we're going to be right, that we're going to get a pullback the early part of next week. That's it for the show. I want you to be careful because it is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm going to do a